Hey everyone, Couch Investor back to another video for today. So Palantir on Monday crashed 9%. At the time of making this video, before the market opens, the stock is down another 1.5% or so. So how much lower can it go? We're going to have a look on the graph on a technical basis. We're going to look at the reason why the stock is down 9%, and I'm going to give more context with regards to those claims, as well as some new announcements that Palantir has made, some pretty exciting ones. So, first up, Palantir stock has soared this year. This issue could stop its run. What issue? Well, the issue that brought the stock down 9%. So, this comes from concerns from an analyst at William Blair. So the worries for Palantir were highlighted by a presentation given by US Army officials last week. Comments made in the presentation suggested there might be friction between the Army and Palantir over data ownership as part of the company's 4-year, $458 million contract for the Army data platform, according to William Blair analyst Louis Di Palma. The contract started in December 2019 and is set to end within weeks. The tone of the comments and plan to maximize the use of open source vendors provide a strong indication that Palantir's renewal contract will be significantly less than the original $458 million. Now, I just want to point out that we're talking here about $458 million, and yet the company lost close to $4 billion in market cap. Just so we're on the same page here, sometimes these things aren't really acting as a rational way in the stock market. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, continuing here. Di Palma said it seems likely the Army would give Palantir a 2-year contract and build a future system with multiple vendors, thus reducing its $116 million per year revenue stream over the medium term. Palantir didn't immediately respond to a request for comment. While the William Blair analysis focuses on a single contract, Palantir is highly exposed to federal government contracts and is known for its defense and intelligence work. I mean, we've seen all the contract announcements in the past weeks, months, and years. William Blair's Di Palma has an underperform rating on Palantir stock, noting shares currently trade at 115 times its forecast 2023 free cash flow, and arguing there is potential for that to compress to a mid-30s multiple. Over the next 12 months, we expect Palantir's multiple to compress as a result of competitive pressures for new defense contracts. Now, with regards to new defense contracts, remember, Palantir has something that they're offering to facilitate innovators, private companies to work with the Department of Defense, agriculture, stuff like that. Remember? FedStart? We're going to talk about that a bit later. Now, talking about valuation, we have to look at PE, EV to EBITDA, price to sales, and here price to free cash flow in the last 12 months. So this is compared to its 3-year mean. Currently, we're still under the 3-year mean when it comes to price to earnings, EV to EBITDA, price to sales. Price to sales were actually very, very close after that 9% drop. We're just a bit under that, and all of that is despite being up 186.6% year to date. We have a market cap of $40 billion. But remember, when you talk about Palantir, it's true that the top line has slowed down compared to what we were promised a couple of years ago. But when you talk about the bottom line, well, the bottom line is actually much better than expected. So we get this type of picture here. Over the last couple of years, we see gross profit margin increase, return on capital increase as well, return on equity increasing, free cash flow, this is for fiscal year 2023. We're not done yet with this year, but as the company becomes more and more profitable, expect free cash flow generation to be increasing year over year as well. There's also the $1 billion share buyback program, which should definitely help with share dilution. By the way, I posted a whole video about the dilution problem for Palantir. If you missed that, it's going to be in the top right corner. Now, I want to talk a little bit on what Shyam Sankar, the CTO of Palantir, posted on X yesterday. This is pretty cool. So Palantir Tech mixed reality service and immersive command and control in action with the 2nd Cavalry Regiment at a recent exercise. Do the work up on the way to the X, plan in real time across the battle, in the rear, in the front, and on the way in the same virtual joint operation center. What does it give you? Well, basically an infinite screen real estate inside the Striker, which is an army vehicle. Of course, we've seen some rumors, some reports of this coming out, but it's nice to actually see this right now already in action. Might be something small, but it just shows the pace of innovation at Palantir, and this will definitely attract more and more eyes towards that companies. Maybe they'll be awarded even more contracts. Remains to be seen. Now, they announced this AIP virtual tables, streamlining data connectivity for next-gen AI architectures. We already got some feedback here from Nathan Marks there, the senior staff solution architect. In just a few minutes, we used virtual tables to register all 1,700 golden tables in our BigQuery data lake. This allowed us to begin building AI-powered workflows instantly. The best part is, we no longer need to copy our data, we can now simply utilize it right where it resides. It's truly amazing how seamless and efficient the entire process has become. They continue by saying here, virtual tables also helps us clean up our cloud spend 40 to 50% by removing large amounts of duplicate data processing and storage and getting to one version of the truth. Which brings me to this. Virtual tables enables users to begin building AIP-powered workflows in minutes. It connects data assets within your enterprise data lakes, data lakehouses, and data platforms without any costly or messy data duplication. Which brings us to basically the selling point here. So AIP virtual tables helps you preserve this optionality in several ways. Eliminates duplication, auto-registration of existing assets, works seamlessly with traditional data sinks, leverage existing Palantir platforms capabilities. Again, I'll repeat myself, this shows the pace of innovation at Palantir. And now that they can deploy these things much faster as well, thanks to the bootcamps, which again is one of the best selling strategies that they've come out with in the last decade or more and more customers can see results in a week already. I mean, you can show them in a week from 0 to 5, right? In a week, how they can improve their operations, how they can spend less and actually do more. This is the power that we have here. And now going back to what was mentioned at the start with regards to that army contract, with regards to more vendors getting contracts, and so Palantir will get a smaller piece of that pie, we have to talk here a little bit again about Palantir FedStart. So delivering cutting edge solutions to the government at the speed of innovation. What does that mean? Well, they are basically eliminating the accreditation barrier. Palantir FedStart is a SaaS offering for eligible companies and startups looking to deploy software to the federal government. So, what do you get? It supports companies to be FedRAMP and impact level compliant, rapidly enable accreditation in weeks at a fraction of the cost of traditional path. The accreditation process of FedRAMP, impact level 5, or impact level 6 can take years and cost millions of dollars in consultant and engineering fees. FedStart can significantly accelerate time to market by eliminating the need for organizations to pursue accreditation on their own. So, of course, there are going to be more and more players entering the playing field that Palantir is playing in. But that was the point. That's why they created this program. If they did not want to have more competition, if they want to create a walled garden, they would have never made something like FedStart. Palantir, in a way, is inviting the competition because it wants this space to innovate better, to move faster, to actually spend maybe money in a responsible way. Because the defense budget in the United States is pretty high. And I mean, I believe they failed their audit yet again for I don't know how many times already, but that's a story for another day. Here, it just proves, yes, there's going to be increased competition, but if they were not really comfortable with that, why would they create something like FedStart? And last thing here is the graphs. Of course, as I mentioned last time, we had a bearish diversion, which is a bearish signal. The stock goes higher, RSI is not higher, which is exactly what has happened. We got rejected here at $20 or so. Then we came down. That's the big red candle we got on Monday, and we continue to go down to reach around that 50-day moving average. Why did I write in the thumbnail $50 next? Well, the 200-day moving average sits at around $15, but if you look at the daily chart, we can actually see this huge gap when they announce earnings. If you want to fill that gap, yes, you have to come down all the way to around $15. Like I said, not all gaps get filled, but most of them do. If we're not getting any momentum or maybe some buying action pretty soon, then yes, it wouldn't surprise me if we go much lower towards that $15 mark. Of course, next week, CPI report, PPI report, and Jerome Powell speaks as well, could be one of these catalysts that could move this stock even lower, or it could push it back up. But like I said on X, I made a post, I said Palantir at $14, I believe. Who says no? Lots of people responded. Lots of people were positive about it, say, yeah, I mean, if I can buy a great company at a better price, why not? Some others were a bit more negative about it, but again, when the price goes up and up and up, everybody's like, oh, I wish I had bought more when it was lower. Well, maybe you're going to get the chance to buy it lower. Maybe Palantir will be buying back their own shares as well if the stock goes lower. So overall, that will be it for this video. Now you know why it was down 9% on Monday, why it could be going even lower in the days to come. Do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.